Hey, good morning, everyone. This is Ken at Tortoise Capital. It is August 13th, 2022. This was kind of a no-notice, last-minute addition to the Van Tharp Systems Development course. We reviewed some systems last week and offered some feedback from Dr. Barton and I, and I thought it might be of interest to let folks digest that for a week, and offered up this opportunity to do a follow-up Q&A session a week later. And it was kind of a short notice, so I'm pleased that some folks were able to make some time. And we have Dan Blum and Javier Chapuis, I think, coming to us from across the Atlantic. So we're struggling a little bit with his connectivity, so he's not on camera. But I just want to say welcome to the fellows and give you a chance to say hi and introduce yourself. Good morning, Dan. How are you?
Very well, thank you, Ken, and thanks so much for uh, coming this week, both to clarify all your great comments on the systems presentations from last week. And I think the other benefit of doing this is it's a way to review the material. I, for one, have taken courses and not reviewed them afterwards, and it fades away a lot more if you don't do that. So I'm going to encourage folks to listen to this recording if they didn't make it today. And thanks again, Ken.
Appreciate it. Uh, Javier? There we are.
So just on my camera and okay. Can you hear me? Okay, perfect. So my name is Joey Chapuis. I'm a French guy. I'm living in Frankfurt, and I'm more a position on a daily basis from 30 seconds to 2 minutes. And I want now to move to a swing system, and it appears to be a completely different. I have some precise questions. I'm very thankful to you, Ken, that you are here and that you offer us this time, because I have a couple of questions specifically about the exits where I need some guidance, I would say.
Yep.
So thank you, and looking ahead for a nice time.
Yep. So I'm going to ask Javier to turn off his video so that his audio comes through a little better. And what I was able to hear was a thanks, and you're looking forward to the material. That you're personally looking to maybe shift your time frame to a swing system, and have some interest in examining exits
Absolutely.
of any particular system as a point of focus. And so I share your interest in swing systems and exits. And I'm not going to replay all of the things that we talked about last week because we actually do have that recording. And I actually made an extract of my commentary from those systems in a nice, maybe a tighter package, which is available if folks want to just kind of zoom in on that. I'll make that available to you. One of the things that I talked about across all of the systems is something that has really become more apparent to me in the last 3 years of COVID trading. And I've always sort of known that it was important to master the craft of trading, some of the details of implementation. And it's a point of view, it's a perspective that I've had beaten into me by about 40 years of Army service and 40 years of trading. And that is that while it's important to appreciate the theory and the doctrine and the purpose of the system as intended and as designed, it's another thing altogether once you put that into motion in the world, in the motor pool or in the field or in the trading market while other things are going on. And especially if you have multiple systems, that there's always things that you learn by doing that are not available to you in any other way, and that it's not really a system, in my view, until you've actually traded it forward and gone through some cycles and learned what kind of things it triggers in you. The kinds of things you learn are important once you start putting it into motion. And so I'm sharing on the screen here something that we've hammered out over the last 3 or 4 years when we're doing coaching, right? Regardless of market condition or type of trading, whether it's day trading or swing trading, whatever. Just the things that we've learned make a difference in the actual craft of trading going forward, being committed to implementing and acting on the insights that we work so hard to get. That, you study something, you come up with an insight, and you commit to an action. And do I follow through? What's my system for doing that? So coaching is a well-known way of actually, as a human, as a monkey, committing to making the changes. So this is the checklist that we've put together, and I just wanted to share it as a sort of a gift. That it's not coaching unless you do these things. And it starts with precisely describing and listing your rules in a checklist format, and writing those rules in a way that you say, I did it or I didn't do it. If it's fuzzy, it's not helpful, it's not clear. And then trade your rule set exactly. In order to actually learn what the rules do, you have to trade the rule set exactly. Now, that may mean that you're paper trading it or trading at a very low level of risk, but you have to let the rules breathe. You have to let them work in order to evaluate them. If you have a rule set, but then you're adding things to it based on how you feel, you're just postponing the understanding of what the rules will do. So you must be able to trade the rules exactly as they are written. And then you want to evaluate your ability to adhere to the rules on a go or no-go basis. Because once you add a trader to the rule set, you've added another rule, another part of the system. Am I following the rules as written? And you got to judge yourself, go or no go. Okay, so you executed the rule, check. Did I follow the rule exactly? Check. Because you're actually checking two things. Did the rule set get performed the way it was supposed to? And then did I follow the rules the way they were written? Only by really committing to doing that and studying the performance can you find out if there was extra things to write to the rule. Like if I have the rules and I notice that they don't address what to do with this particular decision, and I don't know what I'm supposed to do, well, stop the experiment and say, well, okay, now I need to do something about that. I didn't know I needed to have a rule for that, but now I need to have a rule. So you could do a tentative rule in order to just proceed on, but you need to mark that in your journal somewhere so that I just learned that the rule set was incomplete. You might have a standard set of behaviors as a trader for what to do when there's no rule. Well, that's a rule. And you could use that really as part of an addition to any system. What do I do when there's not a rule and it's clear I have to make a decision? Mine is always, what can I do to minimize my risk to the acceptable level and proceed according to my general principles about how to trade? And that would be something like this. I am working with a manageable, understandable reward to risk ratio. I have an amount of risk that I find personally manageable based on evidence, and there is a reasonable, favorable reward to risk ratio, and it's going to stay approximately true as I go forward. Like I'm not a day trader and then I'm going to make and I'm coming to the end of the day and I don't know what the overnight risk is. Well, my rule there is get out of the trade, because I don't know what the overnight risk is unless I've studied it. So I'm not going to accept the unacceptable risk. So having a list of general principles about how you intend to perform when surprised helps you not freeze in the moment. So back to the rules. You've evaluated your adherence to the rules on a go or no-go basis.
I don't know if you can hear, Ken, but your connection froze 15 seconds ago.
No, I'm back down.
Okay for me.
I can hear you now. Is it we still okay?
Now I can hear you. Yeah.
Okay. How far did I get?
Um, how
Or where did it
the
stop?
how the rules would perform is the
Yeah,
last
yeah,
thing.
yeah, yeah. Okay. So to summarize, one of the reasons we want to strictly follow the rules, uh, and I'm going to turn my own video off too, just in case. One of the reasons we want to strictly follow the rules is to find out where the rules are limited or where they're incomplete. And then I want to have a set of personal trader rules. So what to do when I don't have a rule. I'm going to constantly monitor reward to risk, manageable risk, have a favorable reward to risk ratio if I'm going to stay in the trade or get out of the trade. So I'm always on the safe side, moving towards less risk, but maintaining a favorable posture in a moment of opportunity. So I got to be able to evaluate. If I don't feel I can evaluate reward to risk, then I get out of the trade. So that's sort of a general purpose rule that I can also evaluate. The next thing I want to do is I want to record my self-analysis on the chart that I'm using to trade using the daily after action review format. I'm not going to go deep into that, but we have a way of recording on the chart itself things we want to sustain, things we want to improve, and things we want to act on. We commit to action, and we are looking at our planning, our preparation, our execution, and our own assessment. Are we following that procedure in order to learn the most from every trade every day? And we put that right on the chart so that we don't just look at the trade, but we also look at the learning that is associated with it. And that becomes a complete package. Each trade is a teachable moment if we are structured to do that. We then record our results in a histogram so that we don't get trapped by looking at individual trades, but we look at enough data to make evidence-based judgment. And then we evaluate those every 50 trades of the system and of ourselves so that we can see how the system acts over a large data set and how our performance is being affected by the daily commitment to improvement. What we then do as a trader is, when I'm coaching, is I have the trader in writing record what you think I'm going to say about your performance so that you are now getting out of your trading mind and into a coaching mind and trying to think like a coach about your own performance. That's one of the ways that you can separate yourself from the trade is by being a little bit disinterested or clinical. And that will actually help you manage your emotions and respond to things from outside the trade while you're trying to trade. So recording and writing what you think I'm going to say about your performance, you can then compare what I do say to what you thought I would say. And in that analysis, you start improving your coaching skills. We call that learning to look through a coach's eye, or developing the coach's eye. So now that we've done that, we've evaluated the rules, we've evaluated the trade, we evaluated the day, we evaluated our performance through a coach's eye, we listened to what our coach said, we compared what he thought to what we thought about the performance. So that gives us a lot of raw material to reflect on and to journal. From that reflection, we have a list of actions that we're going to commit to, specific actions, relevant actions, measurable actions. And then we put that into a master task list of things that we got to do with priority. And then we pick the things that are the most important that we can do right now. And we minimize our work in progress to just the most important 3 things so that we can get to closure on it. And then when we complete one, we list that and then go to the next most important thing at that time. And then we conduct a coordination meeting with our accountability partner each week to make sure that we're doing it. This is somebody other than your coach. It's your battle buddy. And so you're doing this for each other because you're kind of both in the same spot as traders learning to develop. and it gives you personal skin in the game. Like, you're going to do things because you know your accountability partner is counting on you to do those things, and you're going to talk about it, and you don't want to let them down. And you might be willing to take the heat from your coach, saying, well, I didn't do it, and the coach beats you up or whatever, if that's your relationship. I don't beat you up. I just notice it and say, well, then we're done here. If you're not going to do the work, I don't have anything to work with, and I'm not going to work harder on your performance than you are. So that relationship is a little different than the one you have with your accountability partner. Your mutual coaching, your mutual trading, but you're coming from a slightly different social relationship, and you do things for each other that you might be willing to waive off for yourself. So having that accountability partner and having at least once a week discussions is one of the ways that you bind yourself to the work that must be done. Your sense of duty and respect for each other causes you to do the hard work that we might blow off on our own. So, and then we go through that, and typically the formal monthly coaching assessment normally we'll have 50 trades completed even with swing trades. And then we like to measure the performance over a month so that we have a chance to go through 4 or 5 weeks worth of work and the in-stride adjustments, and then the formal monthly review is a nice way to kind of get to closure after each chunk. So that's what I wanted to say about coaching. Let me pause there and ask the fellows if they have any comments, questions, or additions to any of that before we go to the next section.
I definitely think that feedback mechanism, multiple feedback mechanisms that you described there have a lot of value. I struggle with capturing my results on the trades, and there's a part of me that if I have a losing trade, I tend to want to forget about it. So
yeah.
Even if it's like a demo trade, I want to capture the winning ones, and I got to motivate myself to capture them all and keep going.
Yeah.
And capture them better. That's something I'm aware of right now.
Yeah, something I would say is the net result of doing this week after week, month after month. On my website there, tortoisecapital.net, at the top of the page in the free area, you're going to see some annual performance reviews from some of our traders that have been getting after this for months and years. And you should see what their process is and the results that they're getting is sort of a testimony to why this method of coaching, just getting in there, going to work every day and getting it done with checklists and accountability and coaching, really makes a difference. I would encourage you guys to listen to their annual presentations. They're going to update their performance again at the end of November, and you can see these guys doing the work every night in our nightly strategy podcast where they're posting their charts every day. Here's something that we learned in our true storytelling circle this morning. We were talking about the feeling of vulnerability when you reveal a truth and you tell the truth in public in a story and say, oh no, what are they going to think about me, and now I'm vulnerable and it could be painful. And one of the things that the insight we had this morning was that when you can tell a true story about yourself and put it out there, warts and all, you're actually a different person than the person who lived through it and maybe was vulnerable or didn't follow through or whatever. By your ability to tell the story and put it out there, you've actually changed who you are. And you have healed an important part of that weakness, or overcome some of that weakness or that vulnerability. Because if people are, they're going to say something about you, they're going to think something about you, they're thinking about the person that you used to be that was part of that trade. It's no longer the person that you are now, that you've moved on and you're a different person. And that actually is a very strengthening element, a healing process, but it's also toughening and strengthening. It's not fixing something that's broken. It's part of a natural growth process that makes you stronger because you can endure what used to be unendurable. I could never tell anybody the truth about what that was. And then you find yourself able to do it in a structured set. And then you realize, oh, well, that was just telling the truth. And I can actually learn from it and get stronger. Now I don't have to worry about it because I actually don't worry about what you think. I actually worry about what you say and what you do because I actually don't know what you think. And you might think a lot of different things and haven't come to a conclusion. I actually just really care about actions in the world, and I don't worry about what other people think because there's too much of it, and I can't know it until they say something. And then when they tell me what they think, all I really know is what they said. I don't even actually know if that's what they think or of all the things that they think. So in order to quiet that inner dialogue, that inner monkey, that inner anxiety or uncertainty, we just sort of commit to telling the truth about the trades, warts and all, and then let it go and learn from it and move on from who we were then so that we can be better. You have to let that go in order to be better. Otherwise, you just keep carrying around extra weight more and more until it all collapses. So you have to offload that stuff into the chart, into the trading journal, truthfully. So one of the things that it's important is picking your accountability partner and your coach properly so that you can get through sort of the social anxiety and angst, the trust and truthfulness. And it starts with a place of safety, learning to trust each other and yourself in order to be able to tell the truth as much as you can. And then that becomes like a muscle that you can strengthen and improve on. And you start developing a community of practice where that becomes the expectation. And then like an engine that starts warming up and is ready to go, you can actually really do good work with it. And that's what this checklist does. By focusing you on the process and taking each next step, you learn to develop the thicker skin about what to do when I discover that I'm not perfect. I don't know how long you've been perfect, but it turns out I've actually never been perfect. So this is how you get better. I'm only interested in kind of getting better. So I would invite you guys to listen to the testimony there on Tortoise Capital from the traders that go through exactly this kind of coaching. And I would tell you that should be part of your rule set for the systems that you're designing. 100% of the systems that were briefed last Saturday were about the technical elements of performing the system, as if the system was not connected to a human and wasn't producing results that were going to be judged. One of the things I think you want as part of any system, of every system, is your method of learning from it in a way that will lead to effective action with reliable follow-through, with accountability. If you have a system of doing that, that just becomes part of all the other systems. But that's a system you should be designing and testing and looking to see what happens to my performance when I put that system into play. What I'm just showing you right there is something that we've hammered together over the last 3 years of COVID with nightly work, weekend work, monthly check-ins, and then annual strategic planning updates, if I can say it that way. So just a few ideas for you to think about. Javier, what did you have any things to ask or add on to there?
Yes, I think it's very interesting what you said. I'm thinking also parallel, so I need to put that on the paper. And also coming back to what Dan said, I experience also the same thing. So losses are difficult to accept, but I need to say also that with all the work on myself, before it was really difficult to pull the trigger because I'm, as I said, big system is just working during the 30 minutes or 1 hour after the opening of the future markets, trying to catch some impulsions. So I have a winning trading system, a win rate which is not more than 30%, so a lot of losses. It's emotionally quite difficult to handle, but I always believed in that and was forcing that. And it was difficult for me to accept the losses. It was last year less difficult, and today it's still difficult for the losses. For example, for the draw, it's much easier. I do not understand exactly why, so probably I'm still the person in my head as you described from before, but I'm probably different in this work. I need to understand that. So very interesting what you said before. So here I need definitively to continue to work. but what helped me a lot was I'm an engineer, so my first degree was an engineer, and I understanding stuff. When I deepened that for the trading, I understood that the result of trading is not just the result of one trade, but it's the result of a significant, a good representative series of trades. So when you are looking to the market and to the trading like that, it makes automatically, so it made for me automatically the losses. I'm still experiencing this small, even of demo trade or not paper trade, but on demo trade. So I'm so scared to trade. I have the tendency to want to forget it, and I need to to put some energy and to say to me, no, that's a mistake. Please look at this trade, put it on the paper, analyze it, and it's not an easy topic.
Yeah.
Probably
So
also,
we're still having trouble with
reason why I
the.
want to
Oh, I'm
move
sorry.
also to
Yeah, we're having a little
Yes.
trouble with the audio. So let me summarize what I was able to hear, and let me know in chat maybe if I've captured it correctly. So one of them was, which I thought was important, was that you come from an engineering background and you understand why there can be a difference in design and performance, and that it's important to look at a system as a series of trades over time and not just isolated instances. And then the second thing I heard you say was the challenge of accepting losses, maybe in your gut and with your feelings, even though you know with your rational mind that the system, a trend following system, might only have a 30% win rate and that there's going to be long losing streaks as a part of normal performance. But you can know that with your rational mind and still have a real concern about living through those drawdowns and still being able to execute the system. Is that did I capture those correctly? Over. I'm going to take that as a yes while Javier is working on his connection. One of the things that I would suggest is we talked a little bit about that in the bear volatile system. I use this chart to describe a method of how to think about scaling a system in practice that's worth attention. And I said, maybe starting off with the system, paper trading at first, so you feel how it actually performs without a load, and then maybe going into a pilot program where I think if you trade one share or $1 of risk and see what the difference is between paper trading and trading with real money, even if it's only $1, see if that triggers any emotional reaction. And then using the system at a limited rate of production where we're starting to put a load in increasing the dollars at risk per trade, but not up to the level where we want to get to eventually. So you take a sequential approach to increasing the load instead of putting the full load on right at one time, and then maybe shifting to a full production when it is now being traded at the level that you initially hoped that it would. And then you realize once you go through that little process of back testing, then paper trading, then piloting, then limited rate and full rate production, you're going to know a lot more about your system than you did when it was just on the drawing board. And that you may discover that there are some times when it is so well tuned and so well aligned with the market that it's justified to add a little extra load to it because it's right in the sweet spot. So you only find that out when you have traded it according to the rules strictly through multiple market types, and then learn when it's well suited for taking on some extra risk comfortably. I think race car drivers know when to surge, how close to the red line they can stay, and then in any engineering specification, that red line is a warning sign, but you may be able to stay there a little longer. How much heat can it take? And then you only learn that by really studying the system being performed the same way each time, so that you have enough data to really to evaluate it. And that's what we talked about in the recording. You'll see how we use something like a performance control chart to know the boundary of normal and abnormal, and how we convert individual trade results into a series of data points that allow us to put some engineering statistics on there. So I wanted to talk. So that's actually a good discussion to have. We went into much greater detail than I will here, and it was in the portion on the bare volatile discussion. Those control charts are what we actually do in the monthly reviews, and you can see the example of that, as like I was saying, at the tortoisecapital.net. You'll see guys actually briefing that kind of approach to systematic review. What I wanted to do was shift gears a little bit and talk a little more about the craft of trading. So in our Dan and I, as an example, are going through a weekly, I would call it a coaching workshop. We're in the Creativity 202 course, and every week he has a set of short readings and experiential learning exercises to do that are connected to trading practice, but they are intended to trigger his creative instincts, to look at his own trading beliefs and systems through a different lens, and then see what comes out when he tries the experiential learning and thinks about things in a different way, and then comes to our weekly discussion sessions with others that have done that same work, and we get this little community of practice thing going on. What we're trying to do is just loosen it up a little bit, and then learn to tell the truth about what we thought and did as a way to build resilience. So this is from, it turns out the lesson that he's got a brief on tomorrow, the experiential learning exercise, is asking our students, our traders, to trade what I call naked price, or naked trading. And what I ask them to do is first turn off all the indicators and draw what I call a price box. And all we're going to do on this is we're going to see some kind of price action without any indicators. And I want them to find the most obvious set of consolidation bars, at least 5 in a row. So just using our visual cortex and with nothing more than just plain English, I look at this and say, oh, well, there's 5 bars of consolidation. Why? Because it went up like this. It kind of went sideways. It went up, kind of went sideways. I might pick either one of those, or I might have picked that one. And something that I notice is that, the size of these little consolidation bars is about the same. So it may be tentatively that this is a price box, a box which contains the high and the low of some bars. And maybe there's something about the size of that box, which says when that target is consolidating, then it might be normal or not unusual for it to be of that size. Now, if I take the size of that box and divide it by price, I get something like a percentage of normal variation. It says when it's consolidating, it only varies by that percentage of price. And then when that price maybe gets violated, maybe that's a signal that this thing is resuming a move. Or if it had violated to the downside, maybe that would have been a signal that it was moving down. So that is sort of a working theory of price action. So then the next thing that I'm going to ask these guys to do is take a look, frame the price with the breakout box. That's the same as the price box, except what I'm going to do is I'm going to add maybe a little buffer. So if I had some kind of price, and then maybe I draw the price box that contains it, maybe I draw that box so that it is now a breakout box, so that I just say if it comes out of this level, I'm going to go long, and if it comes out below that level, I'm going to go short, because my hypothesis is that it's no longer consolidating, it's now doing something else. And I don't know when it's going to do that, so maybe I just draw that box and say that as long as it stays in that box, then it's just consolidating no matter where it goes. This is just, another name for this is a noise box, because the trend now is sideways, and as long as it's in here, it's just idling along, so we'll just call that a noise box. And so now my hypothesis, my trading plan is, anytime this breaks out from here, I can put a stop over here and say, as long as this is going up, a new trend is developing. And what would tell me that trend is not really going in that direction would be if it passed through the noise box and is now going this way, that I would take this, a violation of this lower support level, as evidence that the trend is no longer going up, it's going down. So that leads me to describe this space in here as a risk box, a buffer, if you will. And my job is to find out, is that a manageable risk? So we call this thing, this concept, the MMRB, the minimum manageable risk box. And what that means is, if I take this trade from here and this hits my signal to exit, my manageable risk box is probably like this. If I get out here, can I exit in that space before it violates the bottom of that? So I may have a price level that signals and a price level that contains my 1R loss. This is a manageable risk box if I take the signal and I get out of the trade and I never lose more than 1R. If I have 30 trades and I never take more than a 1R loss because I'm using this technique, I am now entitled to say that that is a manageable risk box, meaning that I estimated that my risk was from where I entered and I have to get out before it crosses that line. If I can do that 30 times in a row, I'm entitled to say tentatively that that was a manageable risk box. You know, one of the ways that I could manage that is to have, if I had price in this little consolidation area here, and then I set the manageable risk to here, with the idea that if this triggered here, Well, sir, I have that much room. Whenever I execute that trade and I get filled down in here, I'll never take more than a 1R loss. And I use this for position sizing. Position sizing. And this is my 1R loss. So if I trigger here and I get exited there, that might only be a 0.3 of a loss because I entered here and then it failed, so I triggered and I exited, and this is my 1R loss. I only took a 0.3 loss. I was able to not take more than 1R. So if I can do that 30 times, then I've just defined this as a manageable risk box. Now what I want is the keyword minimum, because this is telling me my 1.0 loss is telling me how large my position size can be. What if I was able to trim that a little bit and say, if I set it here or here or here and still never take more than a 1R loss? Well, if I could set that here and reliably execute the exit and never take more than 1R, I could actually have twice the position size because my manageable risk box was half the size, and yet I'll still never take more than a 1R loss. And then I can use the 1R to estimate what is the size of the reward. I want a two reasonable rewards to the size of my manageable loss. So what I want to do now is find the minimum manageable risk box that I can afford with reasonable entry and exit points so that I'm actually able to see 2-to-1 and achieve gains that are larger than my losses. Then what I have is a manageable system that gives me favorable reward to risk ratios on the basis of understanding price action over long periods of time. So if that is how I think about trading in a practical way, I can now evaluate my system rules, and I can take a look at my expected reward if it works, and I can take a look at my manageable risk. Where am I setting my stop, and why did I set it there? Did I set it at a level that gives me manageable risk but not so much slack that my position size is too small? So I want to know something about the geometry and the construction of what I call this trade frame. So for me, a standard trade frame is something where I have, over a certain period of time going forward, that I have identified some reasonable risk at a time when, if I take the exit according to a rule here, that I have a reasonable expectation that I could see it get to this 2R level. I can get 2 units of reward based on the manageable risk that I can take within a certain period of time. We call that a trade frame. Now, maybe you want 3R or 4R. What I found is that by setting this equal to 2, I get more trades. And as long as I can, once price starts moving up, my job is to figure out how soon I can take my initial risk and move it to a price level that we call no lose plus dinner for 2. No lose plus dinner for 2. This is a moment in the trade when I no longer have initial capital at risk, but I've moved my stop to a point where if this moves against me and I take that exit, I have guaranteed myself to lock in a favorable trade of that much compared to my entry. So I'm not at scratch. That would be no lose. I didn't lose any money, but I'm adding plus dinner for two. Now in Kansas, dinner for two is $100. When I'm trading with standard full production risk, I'm risking $400 per trade. So for me, a no lose plus dinner for two level means that of the $400 I risked, not only am I not going to lose that money, but I'm going to make 100. That's a 0.25 R win. So when I can lock in a little Tate, now that's not the same as, I'm still hoping to get a 2R, but once I can lock in a 0.25 R win, then that means I'm not going to lose money, I've paid for the trade, and that I'm out of the danger zone. And the psychological feeling of knowing that if the worst thing that happens to me is that I'm going to make 0.25 R and I can take my wife to dinner in Kansas, that now makes the rest of the trade management a science project. Science project. And now I don't have any personal anxiety because my seed money is out of the trade and back into safety. And now we're just going to find out how much is that market going to give this trade. And I'm just like a science experimenter, and I'm just interested to see how much money it's going to make so that I can put it into the database and then use that to refine my understanding of the system. So that's this little procedure is the experiential learning exercise for lesson number 8 out of 30 in the Creativity 202 course. And we meet weekly to go through experiential learnings, to think about trading in a maybe slightly different way. And then most importantly, we are going to think about it and reflect on it and say, does that lead to any actionable learning? If so, we put that in our learning journal as a new thing to think about or to act on. And when it's near the top of the list for action, it goes into action among the top 1, 2, or 3 priorities. And this is what we mean by coaching. What Dan is actually doing is going through a experiential learning workshop to generate learning insights that may come out of this. If you're in the sound of my voice, there may have been something that I said in this little discussion that leads you to have an aha moment. Aha! Or maybe it leads to a question to explore. That's what we want to capture and to put that on our master to-do list for learning. And when it's time to think about it, we have a list that we're going to commit to working through with our accountability partners every week, so that we don't lose sight of the things that we want to work on, that we have a plan. Can't learn them all, but I can review the things that I want to work on, do the top priorities, expedite them, do them, and learn from it, and incorporate that into our trading practice. That's what coaching should be doing for you. That's what your accountability partner should be doing for you. That's what your systematic learning journal and daily after action review should be doing for you. But it starts with what I said before, which is having a set of rules about coaching, having a systematic plan for coaching and learning that allows you to take advantage of all the work that you're doing in workshops and doing your daily trades, learning to exploit every possible learning insight from the work that you're going to do in a professional way. That's how you accelerate learning. That's how you move forward. And as Dan was talking about, and I said earlier, learning to tell the truth about the work you're doing is a precondition to maximizing your learning. If you're worried about what people are going to think, then you're never going to actually learn and grow and get better, because you have to put it out there and accept it for what it is so that you can learn from it as a different person going forward. Telling the truth about it allows you to heal it and to strengthen it and to go forward. And when you choose your accountability partner and coach wisely, you're working with people that already understand that. So that's what I wanted to say about the experiential learning exercise. Now, it wouldn't be fair unless I actually showed you kind of what that looks like in practice. So here's a living exercise, which I'm getting ready to do. But I first want to check in with Dan and Javier to see if there's any questions or comments about that last section. Over.
Oh, I'm good. I've been tracking a lot of this stuff from the creativity course and some other nightly podcasts I've been listening to and so forth. So it's good to hear it, and it's given me a few reminders and insights for what I should be doing.
Yeah, nothing I've said there really comes as a surprise to you, because you've been suffering through it every night and every week. So.
Well, but some of it crystallized for me, so I haven't heard it too many times yet.
Well, that's actually, what I learned this morning. What I actually learned this morning in our True Storytelling Circle, and I've been doing that for years, was why it's important not to care about what you think people think, but only to work on the things that they say that resonate. We learned that. I only learned that exactly that way this morning, so it's always a work in progress. Javier, any comments or questions?
Yes, sadly I didn't got all because I was trying to start another computer in order to improve the tone.
Yeah. Well, it's recorded, so you'll get a chance to hear it a little cleaner. And I'm happy to talk with you about it in the future. Like, this isn't the only time I'll do this. Anytime you guys want to talk about this stuff, I'm happy to. You know where to find me. So what I want to do is I want to. I have us at 12, so I'd like to get the do an example of exactly that process. So now I'm just going to go through the numbers. So I have a chart here. It doesn't even matter what time it was, although these are 3-minute bars. I'll tell you that it's 3-minute bars. That blue line was yesterday's close on some symbol. Okay. So I'm just going to follow the instructions here, and I've made the price bars naked, meaning I've turned off all the indicators. So now I'm going to draw a price box over the most obvious set of consolidation bars that are at least 5 in a row. So I've done that here. That was the last 30 minutes of Friday or of Thursday. And so here was the top, here was the bottom. That feels sort of like a reasonable range box. So now what I'm going to do is I'm going to create these boxes, and I'm going to come down here and find out where this thing opened at. And what I have is an opening. It opened right where it closed. Actually, a little bit higher right there. Range, send backward. Range, send to the back. There we go. I'm trying to bear with me here. So now what I'm going to do is march time forward a little bit, and I notice that from the open, this thing breaks out of that little box. What I can actually do is just say it broke out of the previous day's consolidation area, out of the noise box, and I could actually start trading this thing forward and at some point be in the money, because I can be short, and I could have that much money in hand at the maximum favorable excursion. All right. It turns out that that was more than 1R in about 5 minutes. And one of the things that I might do is in a system that I'm developing, I might say, yeah, you know what? I might have had my stop right here at the top of that box. I might have decided after 1 bar, 2 bars, and more than 1R in hand, I might have taken that moment to say, let me move to no lose plus dinner for 2 and just establish my 0.3 win. And then when this thing starts reversing, I might have taken this as an exit and captured a 0.3 win right off the bat. I might have given up a full 1R, like I didn't capture this because I let it move that far against me. This might lead me to say, you know what, maybe if I just trail this with a 1R stop, I end up getting out right about here. So maybe it's a 0.5. So on a set of rules that are just that simple, I might already be in the money. And now maybe I look at this and say, well, after that first move down, this is now back inside that trading box. And so maybe now that it's right in the middle of the box, whether I took that trade or not, maybe I have a rule that says, let me study this thing for at least 20 minutes or 15 minutes. I am 1, 2, 3, 4 bars in, so I'm 12 minutes in, and I might say, if this breaks out here, I'll play this long, and if this breaks out here, I'll play it short, and I will use the full box as my 1R. So maybe I can try that. I might get short. And then scratch the trade, or maybe I take a half an R loss. Let's say it comes back to the midpoint and I take a minus 0.5. Okay? And now I have exactly the same trade frame because it's back inside the noise. And I'm short and I'm down another 0.5. And now it's broken out to the upside. So if I got short and then it came back and I exit, I'm down another minus 0.5. So I've got 0.3, minus 0.5, minus 0.5, and now I'm long. Oh, suddenly let's see. Let me draw. Now suddenly this long from here is 1 unit of risk. 1, 2, 2 plus in hand, and now I'm net positive for the day. Those two pieces right there have paid for the noise that was down here. And now suddenly, into the end of the day, now we're holding this trade, once it gets moving, is 5R on the first entry. I might have other rules that say if I see a consolidation box that doesn't fail but resumes, maybe I can add a position here. Maybe I can add a position here or here. So I might have had any 3 different opportunities to put a second or third position on. This thing could have been 10R as a function of a standard minimum manageable risk box. And so that whole series for the day might have been something like 0.3 minus 0.5 minus 0.5, 5, 3, and 1 for a net of about 7. All on the basis of no indicators other than a visual, we call this visual box trading. Now, what I want Dan and the gang to do is to try this technique with naked price. And then, once you are satisfied with that, figure out where your entries and exits were, place them on the chart, and then go back and turn on your other indicators, your normal indicators, and then see what your system gets or where those entries and exits are as a function of your indicators. Do your indicators show you that those are reasonable places to get in or get out? And it causes you to rethink what you're using your indicators for and what indicators you have and what kind of information they are giving you that are leading to decisions. What I've tried to show on this one is that with a very minimal set of dashboard instruments, you can come up with a very interesting way to get a massive win on what is actually a normal move. This one turns out to be lithium. And what makes lithium especially interesting, once I turn my standard trading indicators on, is that in our standard trading patterns, with just a little bit of addition, like a smooth price and some PSARs, parabolic stop and reverse, our standard entries on, here's the entry, or there's the start of the day. This is our first standard entry, and you can add a position here, and here, and here. So in our standard normal, you got 4 very powerful entries, and our standard exits are here. So this is one trade for us because it came back and hit the PSAR, and then it's a re-entry because the PSAR flipped again. So we end up having 2 strong trades that come in about 6R. And this is in lithium, a raw material that is absolutely necessary for any industrial, commercial, electric vehicle fleet. Like, you can't have Tesla and Rion without lithium. And if you look at lithium on longer time frames, like if you look at daily charts, you realize using exactly the same fractal patterns and with minimal equipment set, we have lows, higher lows. This was one of our standard entries at 73 on a swing trade that's now plus 10% and never looks back. In fact, our problem is where to put for an entry right here that broke out of this channel. We would normally take that as a second entry. So for a swing trade that has two positions on and price is right here, where do you draw the stop? Well, I could do something like my initial risk was here, and it got to here, and now on this one I can get to here, no lose plus dinner for two on both of those, or I might be as high as this. That's a good problem to have. The reason we love this trade is it's already past the measured resistance. All of this is history. The next closest resistance is here and here. Those are both reasonable price targets that this symbol at 81 should be able to get to 83 without too much trouble, and 86. So now what we have is a continuous estimate of reward and risk off a simple set of standard trade norms. So I say all that as an experiential learning exercise to ask you to examine your own beliefs about how much information or sophistication you need to be able to come up with robust, simple systems that you can study and apply to multiple time frames. I just showed you a set of simple graphics that work whether you're on daily charts or 3-minute charts. And if you look at weekly charts, guess what you also get with exactly the same configuration? You get trades where the PSAR flip happened here at 23, an entry at 23 with a $2 stop that didn't exit until it got to 65. So plus 42 on a $2 initial risk. That's what a 21R swing trade looks like using simple weekly charts and a minimal indicator set. This supported spring crossing is a standard pattern that we teach for day trading and swing trading. Oh, and here's your re-entry. $2 risk. Exit. You get long at 65. You get out at 85. That's $20. And that's about a $5 risk because of the size. Plus 20, that's what a 4R swing trade looks like. And this is where the most current one is. Entry at 72 and currently holding 80, so it's plus 8 on a $5 risk. So, how sophisticated do your systems actually have to be? How sophisticated does your dashboard actually have to be? That concludes the experiential learning exercise that you should now reflect on and come up with a set of insights and questions to follow up on, and put that into your learning journal of things to consider, and then evaluate those priorities, and then have a research program and put that research program into action and have the results of your research shared with your accountability partner. And that's what the guys in the Creativity 202 course are going to do. That is a system design for maximum return on learning. So that's what I want to say about that. I have us at 90 minutes in. I want to open it up for any final comments from the boys, and turn it back over to you guys for comments before we conclude. Dan, anything? Oh, I hope this didn't freeze. That would be terrible.
There we go. I was trying to unmute.
Oh.
My comment, I just wanted to go back to briefly to last week when we were, doing the presentations.
Yep.
I had a question or two.
Sure.
It was one of the systems that was submitted was actually your ETF 2.0 system.
Yeah, pretty close.
Yeah, and I understand that's still the one you're using with the your daily report.
Yep.
I actually think I want to try that out. You had a Word file that you gave us, which had some very excellent rules for it.
Yep.
And there was a table describing the entry, table 7. And I didn't understand the entry rules in that table 7. I don't know if it's hard to answer that, without the table up in front of us. But if
yeah, what I want to do is let me work with you on that one offline, because that's actually, a different system. I mean, it's similar to the one that was briefed, so I don't want to. It's probably not fair to the other guys who designed systems that I gave feedback with. But let me answer that one with you tonight on the nightly podcast, because I can pull that up and I'll do a walkthrough of ETF2 tonight in the nightly strategy podcast, because there was somebody else that actually asked me a question about Tim Uberhorst asked me some questions on that, and I want to give it more time than we have available here. Is that fair?
Sure. That's at 8:30 Central Time.
Yep.
Tonight.
Yep.
Okay.
Yep.
Right.
Oh, I saw DR snuck in here. What's going on?
Yeah.
Javier, any questions? Maybe put them in chat if we're having trouble hearing you.
Yes, can you hear me?
Oh, I see one there. Yeah. Yeah. Javier asked a question. He's using naked future charts with only a very few indicators to indicate volatility. I think there's when it comes to indicators, I think less is more. Mm-hmm. And you should pick the ones that really matter to the decisions that you want to take. Like I see, even I have a tendency sometimes to have multiple indicators showing the same thing, and then you think like they are confirming each other. They're not. They're all derivative of price. Like if you have something that's showing overbought or oversold, you could have 5 different indicators and they're all showing overbought. That doesn't mean you're 5 times as confident that it's overbought. It's just overbought. So they're not additive in that sense. And Alexander Elder talks about that pretty effectively in his book, Trading for a Living. He talks about, pick an indicator that gives you what you need, use it, and master it. It's better to master what that indicator is doing than to have, a little bit of everything. Over. Let me see if DR's got his ears on. DR, can you hear us? Javier, anything else?
No. Can you hear me again? Yeah.
Yeah, we can hear you now.
Yes. I
Yeah.
I have questions, but I think I will send you by mails.
That's probably the best,
Yes,
and I can answer them.
yes.
Yeah.
Where is the best place for me to ask those questions? In Basecamp or in?
Oh, just
Uh,
send it to me on just regular email. Is probably easiest
okay,
because I
okay,
don't
we'll do.
always remember where to go in the VTI base camp. So if you send me an email at longke@yahoo.com, then I read that religiously, and then
Okay.
I can what I will do is also send you the link to this video once it gets done too, so that you have it
Okay,
directly.
perfect.
Okay.
Perfect. What is email? I'm not
Oh,
sure
I
I
need
got
to.
it.
I'm sorry. Let me share the screen again.
I just need to write it. It's okay.
Yeah. Yeah. So that's my email right there. Long
Okay, good.
ke. Yeah. Yeah.
That's okay. That's okay. I've got it.
Yeah.
Okay, Ken, I might have found the unmute button.
There it is. Dr.
Yes,
A voice from the distance in the shadows.
indeed.
Yeah, we spent more time probably talking about coaching and implementing insights from a workshop. As you and I have talked about that before, about you know, if anything, we try to do too much in a workshop because we want everybody to know everything we know, and it's always sad when weeks or months go by and maybe you know not everybody's using the things that we've taught them. So we were just talking about the idea that one of the systems you want to design is how to learn reliably and quickly, and not just how to trade, but also uh, how to incorporate the good things that we discover into our standard practice. Like atomic habits, bullet journaling, coaching, that kind of stuff.
Well, you know what, Ken, you've throughout the decades, and you're one of the few people that I can really say that with, that you are the guy that has been on top of that more than every.
Yeah, appreciate that. Yeah, yeah. I mean, I'm I'm a career teacher, and
Yep.
that makes you care about students. And I always say that if you're a teacher, just show me what your students are doing. Then I'll know something about you as a teacher. So I really I've been trying to focus more on what students can do with it, as opposed to try to make it perfect when you send it. No, it's really help them put it on and use it in some way and make progress. It's changed the way I teach at the military college, and with our traders and our soccer players too. You know, more touches on the ball, lots and lots of practice, and a healthy feedback system for coaching that lets us accept the fact that we're not perfect, but that we're trying to get better. That's the thing that matters. Fall down 6 times, get up 7. That kind of stuff.
Huh. And I'll tell you, watching you coach the girls team in Kansas was
Yeah.
a highlight of, as you say, understanding who someone is as a coach by watching how their players play. That was a treat, even if it was an indoor court,
Yeah.
indoor outing that time.
Yeah, that was a lot of fun. I love the indoor game. It's a smaller field, fewer players. It feels more like hockey, and that's my kind of game. Well, let me. I want to respect our time, and I want to give it one last shot to the fellas. I owe you that discussion later tonight, Dan. We will record that too, of course. And I will get that emailed to you and Javier, and get the movie produced here. Um, so unless there's any other burning questions, I'm ready to uh, uh, free us to get back to work, if I could say it that way.
Well, it's a Saturday, but
Yeah.
free us to get back to whatever. And
Yeah.
I'll try to make it tonight, for the,
Yeah.
and thank you so much for spending the time with us today and helping out with the systems course.
Sure.
And to you too, DR. Thanks so much.
Oh, you guys had some really, really cool stuff going. So I really enjoyed it.
All right, fellas.
If you are hearing me.
Yeah. I declare this meeting adjourned, and you guys be safe and happy out there, and go do something good for the team. Take good care.
Thank you.
Cool. God bless you. Talk soon, Ken.